Brian Shannon from alphatrends.net. Today is Friday, the 10th of January, 2020. Hope you had a good week in the markets. It was kind of mixed here a little bit in that the Russell 2000, which obviously lagged a lot last year, is once again lagging this year and is negative year to date. Biotechs are lagging a little bit as well, but had a positive week. Oil got hit, and let's take a look at the indexes and some recent stocks we've looked at on Twitter. So the S&P 500 is clearly still in an uptrend, higher highs and higher lows above a rising 2050. Every single moving average you can mention on the daily time frame, and even on an intermediate term time frame, we remain in a strong uptrend. We're above that rising 5-day moving average, and this right here, the blue, is our year-to-date volume weighted average price. That's a volume weighted average price I'm going to keep on my charts for the entire year. Here's our week-to-date volume weighted average price, which we also held above. So clearly we're still in an uptrend. It's easy to look at this market and say it's up too much or it's due for a correction, but until there's actual evidence that a correction is developing, there's no point trying to bet against the market. And ride the trend, enjoy the profits that are accumulating in your long positions, but know where you'll get out and have your stops in place for the time frame that you're engaged in. Nobody's going to sell the top. Maybe you do, but you get lucky. It's not because of skill. It's an impossible skill to develop. The NASDAQ 100, 1 day off of its all-time highs as well, clearly still in a strong uptrend. Here's our year-to-date volume-weighted average price. We're above that rising 5-day moving average. I've been pointing out the volume-weighted average price from the 16th has been one that's been important, and we saw that again here just recently. So over to the Russell 2000, where we're seeing some, that this market's a little bit of a laggard. Here's our daily time frame. It's still healthy, and I think we give the benefit of the doubt to the buyers as long as we remain above 163 to 163 and a quarter. Over to the 15-minute time frame, we've just got some choppy action. I've been telling subscribers that as long as we remain above the low from the 6th, that you want to maintain your bullish outlook. And here we can see the volume weighted average price off the December low is what is so far holding this market up, at least on a closing basis. We can see that with more clarity here in the 30-minute time frame. What I'll do is actually clear everything off except for the year-to-date volume weighted average price and the month-to-date, which looks just like this. So that is clearly an important level. Someone asked me today on Twitter, where do you set your anchors? Basically, I set them every day. It's a daily VWAP for shorter term stuff. I have a weekly volume weighted average price. I also always have the month to date volume weighted average price, and then I go off of important highs and lows, as I had shown in shares of Apple on a very short term time frame. That the example was that it can be valuable even for short term trades. Now let me just get rid of these, and here's the way I'd presented it on Twitter, was that we have today's volume weighted average price, which initially the market held above, and then it broke down, it became resistance, and that became resistance over here twice throughout the day. Well, then another important anchor point at that point was to put it at the that little waterfall decline, important emotional points, and you can see how that had held as support and then as resistance later in the day. So it depends on your time frame, but generally speaking, you want to look at it since significant events, such as on a daily time frame. What looks important to me is this gap, and you can see how it's holding on a closing basis there. From this low, I think, is important. Year to date is important. It all, again, comes down to your time frame. Semiconductors pulled back right to their year to date volume weighted average price, and you can see so far in the semiconductors, once we got back above it, that has been defended from buyers, at least so far in the semiconductors. So, clearly that's an important volume weighted average price. On the daily time frame, we're still in a clear uptrend. Yes, we're extended, probably due for a pullback. Know where you're going to get out. Don't let the market surprise you. We had, a false breakdown here this week, but it came right into this band of volume weighted average price levels that I've been discussing. If you go back to last week's video, I had mentioned this area. The biotechs, I'm I'm looking for a place to get long these biotechs. I still think that, they broke out to a new high and trapped people who chased that breakout. And there was clearly a chase, and I identified it as that because what people had, who were purchasing that so-called breakout hadn't considered was that this market was up 25% prior to that breakout. Now we're seeing a pullback. It's a healthy pullback. I think that next week we want to see it settle down, probably above that rising 5-day moving average, and then it'll most likely present us with a low risk opportunity. I don't want to buy on a pullback, though. I want to buy after a pullback has gone sideways. The financials are just, kind of chopping around back and forth, still within this bigger range right here. So that, this is really what's the near term important volume weighted average price level, plus from this little low in December, you can see how that's been holding on a closing basis. I don't have a lot of insight, truthfully, into these financials other than the longer term trend is higher. So you've got to give the benefit of the doubt to the buyers in the financials, unless they break below this recent, this low right in here, below this low, then we probably see a little bit further correction. Let's take a look at some stocks that I've mentioned on Twitter recently. MDLA was one I had mentioned, and these were all, you go to Twitter/Alpha Trends or however you find it. I was talking about the volume weighted average price from the IPO, which by the way is a very important volume weighted average price on individual stocks. That general area acted as support as it was rising, and then we saw it broke down, found resistance there once, twice, 3 times, and now we're back above it. So I like MDLA, and this is what we were looking for. I think that, for the bullish scenario, we want to see something like this develop in shares of MDLA. AK Steel, let's talk about this one. This is one I had mentioned also that looked potentially bullish. The thing is, it never gave an entry signal after we were looking at it. We didn't chase it on this day, fortunately, and since then it's had a declining 5-day moving average. So I'm done with that one, been done with it, never got involved. SBAC just triggered today as it broke above this little consolidation range. And if you look at, again, what's the volume weighted average price from this high, you can see how it's not perfect resistance, but it's another tool to add to your analysis to say, what's the psychology of the average participant from this peak? Well, the average price had been declining, so it's likely to bring in supply. Then as it flattens out, the average price is neutral, so it's likely that the buyers can regain control easily, as they have done so here in shares of SBAC, and this one is on its way. OSG is another one I had mentioned, but still haven't gotten involved in this one. We watched this every day this week in Alpha Trends, looking for it to possibly, I was looking at it saying it's holding this volume weighted average price, but we weren't getting involved because it was still making these lower highs. And even though this was a higher low, we had a 5-day moving average that was still declining. What we were looking for was for it to do this, to turn sideways, and then to buy as it got above this level here. That would have given us the higher high, and we would have set our stop underneath this low. Now the stock is broken, OSG. I have no interest in this, not now. I'm going to continue to check on it each day at the end of the day to see if it does, kind of recover in here. Maybe even set an alert at about $2.30 so I don't forget, $2.30 so I don't forget about it. But right now there's no point owning it. I don't buy stocks while they're in a pullback, and a declining 5-day moving average tells me they're in a pullback, and that can keep you out of a lot of trouble. Datadog I had mentioned today using the excellent MarketSmith information. And here on the daily time frame, again, you can see we're above the volume weighted average price from the IPO, and that level had been holding in here as well. So if we go over to a 30-minute time frame, we can take a volume weighted average price off the peak, and you can see that the buyers who paid the highest amount, if they've been averaging in, the average price since there is advancing, so the buyers are in control. Now we see the volume weighted average price year to date initially had a little bit of trouble, then it was tested and held as support. Maybe we pull back to that this upcoming week. I don't have a long position in this one. From that entry, at Alpha Trends, we were actually long over here at, what was the price? I had forgotten. I've got it written down here in my notes, but it was 37.71. What I'm looking to do though is to add if it gets above this level here, really above 41. And I'm not going to blindly buy it if it just rips through there Monday morning. I want to see it do something like this and then create a higher low so I can protect myself with a stop maybe underneath this low or worst case here. So it's still developing. CDNS was one that I had mentioned this week. Right here on this day, at the close that day, I had mentioned CDNS. Keep an eye on this one right here as it looks like energy is building for a breakout. And in fact, it did do that. This is where we got involved in CDNS at $71.30 per share. We didn't wait for it to break beyond this peak because that's chasing at that point above that 71.50. We got it as it made evidence that it was getting right here. Our stop was at that point. Right now we've taken a third off with a gain of 80 cents, and we've got our stops, one here at $72.15 and the rest of it at $71.40. So that's the way that I look at these stocks. When I put them on Twitter, I'm not suggesting you just go out and buy it. That's foolish to buy anything because of someone's tweet. It's there to bring an idea to you and say, take a look, see if it makes sense to yourself personally. If you need help with these ideas, that's exactly what I do every single day at alphatrends.net. Thanks for tuning in and have a good weekend.